All right, let's dive into Swire Pacific. We've got their 2023 annual report here, and it looks like you're interested in their businesses, how they did financially, and what they're planning for the future. So first impression, Swire Pacific had a pretty big year, huh?
Yeah, you could say that. They had a record profit of HK $36.2 billion. That's huge compared to the year before. A big part of that was travel bouncing back and some smart moves they made along the way.
Okay, so before we get too deep into the numbers, let's back up a bit. What exactly is Swire Pacific? They're a conglomerate, right? What do they actually do?
Well, think of them as this diversified powerhouse with a long history in Asia. They've been around for over 150 years, mainly focused on Greater China, and that's where their expertise really shows. You can break down their business into three main areas: property, beverages, and aviation.
Let's unpack those, starting with property. I mean, their real estate holdings are massive.
Oh, absolutely. Swire Properties is a major player. They have over 2,200 retail outlets. Plus, they provide office space for over 70,000 people.
That's a lot of square footage. And they're not just in Hong Kong, are they?
Nope. They've got a strategic presence across major cities in mainland China: Beijing, Guangzhou, Shanghai, Chengdu. They're everywhere. They're even in Miami, Florida. But their main focus, definitely Greater China. That's where the growth is.
The report mentions Taikoo Hui in Guangzhou. Sounds like a city within a city.
It's a perfect example of their mixed-use development approach. They've got a shopping mall, office towers, a Mandarin Oriental hotel, even service apartments, all in one place. It's all designed to create a vibrant community where people can live, work, and play.
Okay, that makes sense. Now, on to beverages. I was surprised to learn that Swire Coca-Cola actually employs more people than Swire Properties.
It just shows how huge their beverage operation is. They're a key bottler of Coca-Cola products, covering mainland China, Hong Kong, Taiwan, and the U.S., although they sold off that part of the business in 2023.
Ah, right. Strategic divestment, probably a factor in those record profits.
Yeah.
But we'll come back to that. For now, let's talk aviation. Probably what most people think of when they hear Swire, right?
Definitely Cathay Pacific Airways is their flagship airline passenger and cargo services to 92 destinations worldwide, 181 aircraft in operation, with another 46 on order. So yeah, ambitious growth plans for sure.
Sounds like they're putting the pandemic behind them and aiming high. But Cathay Pacific isn't their only airline, is it?
Not at all. They've diversified there too. They also own HK Express, a low-cost carrier, targeting a different market segment, and Air Hong Kong, focusing on cargo, primarily for DHL. So yeah, pretty much every angle covered within aviation.
So we've got property, beverages, aviation, but it seems Swire Pacific has even more up its sleeve. They're moving into healthcare, which seems like a whole different ballgame.
Yeah, it's interesting, right? Shows they're willing to explore new areas for growth, particularly those with long-term potential. They took a minority stake in Indonesia Healthcare Corporation. So we'll see how that develops.
Clearly not afraid to diversify beyond their core businesses. So we've got this massive empire, but how did it actually perform in 2023? We mentioned the record profit. Let's break down those numbers a little.
Okay, so let's take a look at their income statement. It tells a story of a pretty impressive turnaround, driven by a bunch of factors. Their revenue shot up, thanks to travel picking up after the pandemic, and their other businesses did really well too.
So everything was clicking, so to speak.
Exactly. But it wasn't just about growing revenue. They also managed to improve their profitability. Their operating profit margin went way up, which tells me they're managing costs well and their operations are running smoothly.
Making more money on each dollar of sales, that's impressive.
It is. And their net profit soared too, reflecting the positive impact of those strategic moves like selling off the U.S. Coca-Cola business. Plus, the core businesses were strong overall.
All right, so their income statement looks pretty good. What about the balance sheet? What does that tell us about their financial health?
Their balance sheet is rock solid. They got a good mix of assets, a lot of investment properties, a strong cash position, and their debt is manageable.
So they're not over-leveraged or anything?
Not at all. They're pretty conservative when it comes to debt, which gives them flexibility and resilience, especially if the economy gets shaky.
That's good to hear. It means they're in a good spot to handle whatever comes their way and grab any opportunities that pop up. But what about cash flow? Are they generating enough cash to keep things running smoothly, to invest in new things, and of course, to pay those dividends everyone's talking about?
Absolutely. Their cash flow statement is strong. Plenty of cash coming in from their operations, driven by their strong profitability, and they're managing their working capital efficiently.
So the profits aren't just numbers on a page. They're translating into real cash.
Exactly. And they're using that cash wisely, reinvesting in their businesses, making strategic acquisitions, and giving back to shareholders through those dividends and share buybacks.
Speaking of cash, let's talk about free cash flow. That's a key metric for investors, right? It represents the cash that's left over after they've invested in their business.
Yeah, it's a measure of their financial flexibility. And Swire Pacific has consistently generated strong free cash flow, which really highlights their financial strength and ability to create value for their shareholders.
So they've got this well-oiled machine that's churning out cash. Now let's zoom in on those business segments again, starting with property. What are some of the big trends and challenges they're facing?
Well, one trend that's really changing the office market is the rise of remote and flexible work arrangements.
Yeah, like these traditional offices being disrupted. How is Swire Properties adapting to that?
They're getting creative. They're offering more flexible and collaborative workspaces and focusing on amenities that make the office experience better overall.
So it's not just about providing desks and chairs anymore.
Exactly. It's about creating an environment that attracts tenants and makes them want to stay, even in a world where people have more choices about where they work.
What about their retail portfolio? How are they dealing with the rise of e-commerce and changing shopping habits?
They're transforming their malls. They're going from just transactional spaces to these vibrant community hubs. They're offering a mix of retail, dining, entertainment, even cultural experiences.
So it's about creating a destination, an experience, not just a place to shop.
Precisely. They're turning their malls into places where people want to hang out, connect with others, discover new things.
Okay, so they're evolving with the times. But let's not forget, there are massive developments in mainland China. What's their strategy there?
They're tapping into the continued urbanization and the growing middle class in mainland China by creating those mixed-use developments that cater to a modern lifestyle. Think residential, retail, office, and entertainment, all seamlessly connected.
A model that's been successful for them, and now they're replicating it on a grand scale.
Exactly. And they're incorporating sustainability into their designs, making energy-efficient buildings, reducing waste, promoting green spaces. It's about creating not just livable spaces, but sustainable ones too.
That makes sense. All right, let's shift to their beverages division. What are some of the key trends and challenges they're facing in this market?
One big one is the growing demand for healthier beverages. People are more conscious of sugar intake and artificial ingredients. So Swire Coca-Cola needs to keep innovating and introducing new products that fit these changing tastes.
Right, it's not just about sugary sodas anymore. How are they adapting to this shift?
They're coming out with more low-sugar and sugar-free options and drinks with natural ingredients and added benefits. They're also expanding their distribution network and using digital marketing to reach new customers and build brand loyalty.
So they're riding that health and wellness wave while trying to stay ahead of the competition. Speaking of competition, let's move on to their aviation division. What are some of the main challenges facing Cathay Pacific and their other airlines?
Well, fuel prices are always a big one. Jet fuel is a major expense, and when oil prices jump around, it can really hurt their profitability. They're always looking for ways to manage this risk, whether it's through fuel hedging strategies or investing in more fuel-efficient aircraft.
Trying to control what they can in a volatile market?
Mm-hmm.
What about competition from other airlines?
That's always a factor. They've got competition from both full-service carriers and low-cost carriers. So they need to stand out by offering a great customer experience, building a strong brand, and operating efficiently.
It's not just about getting people from point A to point B. It's about the whole travel experience, right?
You got it. They're investing in their fleet, improving in-flight services, using technology to personalize the journey for passengers, and they're focused on sustainability too, reducing their carbon footprint, investing in sustainable aviation fuels, and offsetting their emissions.
Okay, so they're taking a holistic approach, trying to be efficient, innovative, and responsible all at the same time.
Exactly. And the way they performed in 2023 suggests they're on the right track.
This has been a great overview of their business segments and the things that are shaping them. In the next part of our deep dive, we'll focus on their plans to create value for shareholders, especially when it comes to dividends and share buybacks. All right, welcome back to our deep dive into Swire Pacific. We've talked about their businesses, how big they are, and how well they did financially in 2023. Now let's shift gears and talk about something investors really care about: creating shareholder value.
Yeah, that's a big one. And Swire Pacific is really upfront about how committed they are to delivering value to their shareholders.
Yeah, so let's start with dividends. What's their dividend policy like?
Well, they focus on sustainable growth and consistency. They aim to pay out about half of their recurring underlying profits as ordinary dividends.
So they're sharing the profits with investors in a way that's predictable and sustainable.
Exactly. And their dividend increase in 2023 was huge. A 277% jump to HK $11.32 per A share. That really shows how committed they are to sharing their success with investors.
Definitely a positive signal. But dividends aren't the only way to create value for shareholders. What about share buybacks?
Share buybacks are another tool they use. They had programs in both 2022 and 2023.
What was the impact of those programs?
They bought back a total of 11,625,000 A shares and 18,562,500 B shares, costing them HK $875 million. When they buy back shares, it reduces the number of shares out there, which can actually increase the value of the remaining shares.
It's a way of returning cash to shareholders and potentially boosting the value of their holdings. But share buybacks aren't a cure-all, are they?
Right. They need to be part of a bigger plan. That includes those dividend payments, investments in growth opportunities, and of course, careful financial management.
But speaking of careful management, the report talks a lot about their focus on staying financially strong.
Absolutely. They follow financial covenants and have credit rating goals that guide their decisions about their capital structure. This disciplined approach makes sure they've got the flexibility to handle challenges and jump on opportunities that come up.
Sounds like they're thinking long-term, building a solid base for sustainable growth. Now let's zoom out a bit. What does all this mean for the future of Swire Pacific?
Well, based on what we've seen, they're in a great spot to keep succeeding. They've got a diverse range of businesses, a strong financial base, a clear growth strategy, and a commitment to sustainability.
But there are always challenges and uncertainties, right? No business operates in a bubble.
Of course, the global economy is always something to consider, and each of their businesses has its own unique hurdles to overcome. But Swire Pacific has a long history of resilience and adapting. They've weathered a lot of storms, and they seem prepared for whatever comes next.
So they're a company to keep an eye on, both for their financial performance and their impact on the Asian economy and beyond.
Absolutely. They're a major player on the global stage, and their decisions have a wide reach.
This has been a really interesting look at Swire Pacific. We've uncovered a lot about their businesses, their financials, and their overall strategy.
It's been a great exploration.
Before we finish up, let's go back to their commitment to sustainable development. They're not just talking about it. They're actually taking steps to make sustainability a core part of their business.
Right. Their Swire Thrive 2.0 initiative really shows that they've set ambitious goals like reaching net zero carbon emissions, water neutrality, and zero waste to landfill by 2050. Those are some big targets, and it'll take a lot of effort to get there.
And they're not backing down from the challenge. They're putting money into energy efficiency, renewable energy sources, waste reduction, and responsible sourcing. They're also working with their suppliers and partners to encourage sustainable practices throughout their entire supply chain.
And they're even tying their financing to those sustainability goals, which shows real commitment. It pushes them to hit those targets and attracts investors who are looking for companies that prioritize ESG principles.
It's a smart move that aligns their financial goals with their sustainability goals.
Exactly. It's a win-win.
So they're putting their money where their mouth is when it comes to sustainability. They're making a genuine effort to reduce their environmental impact, promote social responsibility, and run their business ethically.
Yeah, and I think this commitment to sustainability is a big part of why they'll be successful in the long run. It's not just about doing the right thing, it's about building a business that can thrive in the future.
And in a world that's increasingly focused on sustainability, that's a smart move.
Definitely. It gives them an edge over their competitors and positions them as a leader in their industry.
So as we wrap up this part of our deep dive, what's your overall assessment of Swire Pacific?
They're a company with a rich history, a diverse portfolio, and a clear vision for the future. They've shown that they can adapt to changing markets, handle tough situations, and deliver value to their shareholders.
They've got a solid financial foundation, a great track record, and a commitment to growing in a sustainable way.
Exactly, and I think they're in a good position to keep doing well in the years to come.
This deep dive has been really insightful. We've got a good understanding of Swire Pacific, from how they operate to their financials to their sustainability efforts.
It's been a great exploration.
And as always, we encourage you to keep exploring and learning more about the companies that are shaping the world.
Stay curious and stay informed.
That's it for this part of our deep dive into Swire Pacific. Stay tuned for the final part, where we'll look ahead at what's next for this fascinating company. All right, welcome back to our final look at Swire Pacific. We've covered a lot of ground: their businesses, their financials, and their commitment to shareholder value. Now let's try to piece it all together. What's next for Swire Pacific? Their core focus seems to be on Asia, especially Greater China.
Yeah, for sure. They see Greater China as the main driver of their growth, and it's easy to see why.
Right, they've got a long history there, a deep understanding of the market, and strong relationships. It's a competitive advantage that's hard to beat.
Exactly. And the report talks about how optimistic they are about Hong Kong's recovery. Plus, they're putting a lot of faith in mainland China with those massive projects in Shanghai.
Those projects are a perfect example of their strategy. They're banking on the continued growth of cities and the rising middle class in China.
And they're not just putting up buildings. They're building entire communities that fit a modern lifestyle. It's a model that's worked for them.
Retail, residential, offices, entertainment, all connected. It's about creating a destination, not just a building.
Right. But they're also dealing with some challenges in the office market with more people working remotely. How are they adapting to that new reality?
Well, they're realizing that offices need to offer something more than just a place to work. They're focusing on things like flexible spaces, cool amenities, and building a sense of community.
Making the office a place where people want to be, even if they're not there every day.
Exactly. So they're in a good position to grow in your core markets. What about expanding into new areas like healthcare?
That investment in Indonesia Healthcare Corporation is a strategic move. Healthcare is a big growth area in Asia, and it fits with their focus on sustainability and well-being.
It's a way to diversify and tap into a market with huge potential.
Exactly. It's a long-term play, but it shows they're serious about finding new avenues for growth.
Speaking of long-term, their Swire Thrive 2.0 initiative sets some pretty ambitious sustainability goals. Net zero carbon emissions, water neutrality, zero waste to landfill by 2050. Those are some bold targets.
They are, but they've got a plan to reach them. It involves energy efficiency, renewable energy, cutting down on waste, and responsible sourcing.
They're not just talking the talk, they're walking the walk. And they're even tying their financing to those targets.
Which is a big deal. It shows how serious they are about making a real difference.
So they're leading by example,
Right.
showing that sustainability and profitability can go hand in hand.
Absolutely. And that's a powerful message to send, not just to investors, but to everyone.
So as we wrap up this deep dive, what's your overall take on Swire Pacific's future?
I'm optimistic. They have a clear vision, a great track record, a strong financial base, and they're committed to sustainability.
They seem ready to take advantage of growth opportunities in Asia and beyond, and they're showing real leadership in a world that's increasingly focused on responsible and sustainable businesses.
I agree. They're definitely a company worth keeping an eye on, not just for their financial success, but for the positive impact they're having.
It's been fascinating to really dig into Swire Pacific. They're a company that often flies under the radar, but they're quietly shaping the future of Asia.
Yeah, they are. And I hope this deep dive has given you a better understanding of this dynamic and impactful company.
This deep dive has been incredibly insightful. We've learned so much about their businesses, their financial performance, their growth strategies, and their dedication to sustainability.
It's been great exploration.
And as always, we encourage you to keep exploring and learning about the companies that are shaping the world around us. Thanks for joining us on the deep dive. We'll see you next time for another fascinating exploration.